Headline inflation for April 2021 slightly eased off from 18.17% in March to the current figure of 18.12%. Meanwhile, the Buhari administration is not relenting on its efforts at arresting the slide occasioned by COVID-19, or put in another way, making the best out of a very bad situation. Just before leaving the country for the African Financial Conference in Paris, France, President Muhammadu Buhari placed before the Senate a request for another external loan to fund the 2021 budget, this time up to the tune of $6.18 billion. Well, we're now being joined here in Lagos by Bismarck Rewane, a member of the Presidential Economic Advisory Council and Managing Director and Chief Executive Officer at Financial Derivatives Company Limited. Welcome to the program, Mr. Bismarck Rewane. A pleasure to have you again on the program.
Good morning. Thank you for having me.
Yes, well, you're welcome. Very quickly, two issues. We'd like you to help give us an overview of the current state of the economy. Almost every day we look at the economy on this program. And then to respond to this story about the Buhari administration's quest for a fresh 2.3 trillion external loan. These day reports that analysts differ on this and that there are mixed reactions. Those two quick issues before we proceed.
Okay, let me start off by saying that the economy is still witnessing tepid growth. The economy is faced with structural as well as contemporary problems. That the economy is actually, you have real GDP of about 0.11, and we will get some numbers on the 24th of May, and I do not expect a miracle. And that potential GDP is growing at about 8%. To that extent, it tells you quite clearly that Nigeria is facing a recessionary gap. Having said that, there are a number of tools that are being used to confront that situation. One, fiscal tools. Two, monetary tools. And third, actually dealing with the security issues so that to reduce the level of disruption in economic activity. Having said that, we have to understand, and the Presidential Economic Advisory Council has made it clear, both in camera and in public, that the economy is still fragile and that it needs a clear stimulus and an impactful stimulus. And this stimulus will come in a combination of ways: debt, investment, and to a large extent, reform, economic reform, so that you have all of these factors coming together to give you a major boost to economic activity, looking at output, employment, and price stability. I think those are the key issues. But to break it down so that the viewers can understand what we are saying, we are saying that the economy is growing at almost 0%, even though coming back from a negative, that Nigerian investors are a bit confused as to whether what policy statements and policy actions are consistent. Nigerian consumers are concerned about an erosion of their disposable and discretionary income. Therefore, there's a little hope at the end of the tunnel, but quite frankly, these are very difficult times, both for investors, consumers, and policymakers.
Well, I asked you about the front page story of the This Day newspaper today, the loan that the Buhari administration is seeking and the mixed feelings that has generated.
Okay, let me break it down. External debt has three components. There's the multilateral debt, which you take from the World Bank, the IMF, which are concessionary, 30, 40 years at about 1% rate of interest. Those don't bother you and they insist on governance rules that will insist that you follow due process and that there's an impact for the kind of investment that you're making. The second one are export credit agencies, which is like the one that the Chinese or the French or the Germans will give you to support their own exporters, like, let us say, for example, your airports built by the Chinese or your power stations. So you have export credit and rail lines, export credit financing. Then the third one is what they call the international capital markets, which is the Eurobond. So let us break it down. You see that Nigeria has some commitments from the World Bank and the World Bank in particular about some loans to support the palliative and pandemic activity. We also have some forbearance under the international debt standstill arrangements. Nigeria also has it's a recipient of major investments from the Chinese in terms of the rail, the Mambila Plateau, the airports, and all those things. And then finally, Nigeria, like some other countries in Africa, is going to be approaching the international capital markets to float a Eurobond, maybe about $3 billion. Remember, you will recall that in January this year, we repaid $500 million. And therefore, when you look at our rating as a country, when you look at how much debt the question now arises, what are you going to use this debt to fund? And what is the impact of this activity on the productivity of Nigerians? Mind you, Nigeria's total factor productivity is negative. Nigeria's labor productivity is negative. Therefore, these things that we are going to invest in must have a way of unlocking and actually deshackling a Nigerian constrained output. And so that is where I will leave it. But it's important to know that if you are going to be borrowing to pay for the Lagos-Ibadan rail all the way to Abuja, to Kano, and you are going to be paying for the completion of certain roads, those things will and should actually increase productivity. And once productivity increases, output increases, then your income per capita begins to get better. And hopefully, the economic insecurity, which is leading to political misunderstanding and conflict, will actually reduce.
Well, we certainly hope so. But, anyway, let's remain hopeful. The general perception, like you just spoke about the viewer's perspective, debt or further borrowing is never a popular move, as you just alluded to. And you have said quite clearly that it all depends on what projects are being invested in. The letter that the president wrote to the Senate president contains an Annex 2 and an Annex 3, which is reportedly stating exactly what that debt is going to be used for. Do you, as a member of the Presidential Economic Advisory Council, have any projects that you specifically hope to see on that list that you have advised should be on that list? Because your recent report just talked about the dynamics of unemployment in Nigeria, and the sort of little fragile green shoots that we're seeing in certain sectors are not sectors that really are labor intensive. They don't employ a lot of people. So what should the government be looking to now?
No, while you might not have direct impact of the project on employment, you will have a situation where, for example, if there's increased investment in ICT, and because of that increased investment in ICT, the beneficiaries of this are you and I, who can then use broadband penetration for telemedicine, teleeducation, and payment and settlement systems. You'll find that in itself, right, now leads to further gains and productivity. So directly, no, but indirectly and in an ancillary nature basis, you begin to see that these things have further indirect impact on productivity and output. What you want is productivity and output. Then also, the gains that will come from this, especially if you do things to deal with the subsidies in the system, which are actually destroying the system. If you do that, then you would now use the gains from this to fund direct investment, scholarships for children, education, health care, so that the impact, the amount of money people spend paying for private medicine, private education, and all this will now be used to buy goods and services, increase aggregate consumption, and by so doing increase and have a shift in the aggregate supply curve for Nigeria as a whole, and everybody benefits from that. If you look at our 5-year average, we're having a 5-year average growth rate of less than 1%. In the previous 10 years, the average growth rate was about 5%. So you don't need to be told, and everybody knows, it's well documented, that the economy is performing suboptimally and it's quite fragile. And that is what we put before Mr. President, and steps are being taken to address these issues. Will these steps, are they clear to everybody, and will they deliver the results in good enough time for people to feel the impact? These are the things that need to be done to accelerate it. And two, to ensure proper coordination between fiscal, monetary, investment, and trade policy so that everybody is aligned and can get the benefits of a seamless economic transition.
All right. Thank you so much, Mr. Bismarck Rewane, for your insights as always. I mean, we're at a point where the conversation is not even about, pulling out subsidies. We've gotten to that point because of the economic realities. A lot of people are arguing it has to be pulled out. Apart from what it takes away that could be used for the economy, we also have, ancillary costs, like petroleum stabilization costs and the likes, because the price of petrol is not at equilibrium in every part of the country. So you have to have sort of like a buffer system for all of that. But my question to you is, should subsidy be pulled out? 2, what should be the mechanism of pulling it out? 3, how can we cancel out the ancillary inflation that come for the subsidy pull-out and increase in probably salary and things like that, more money that will be put into the economy?
First of all, let's define what are subsidies. Subsidies are reverse taxes. One, they distort the allocation of resources. And I'll give you a clear example. It is said and it's believed that we consume 93 million liters of petrol every day in this country. I don't know where that number comes from, but the reality is that even 5 years ago, when the economy was humming and things were moving, and the number of cars that were registered in Nigeria were something like almost 200,000 cars a year, our consumption was about 30 million liters. Now the economy is in decline. Now that there's contraction of our economic activity, at best plateauing at a low, how could our petrol consumption grow by 200%? What it does mean is that petrol is being smuggled out of the country, and people are making money. So the country becomes a smuggler's paradise. And it's time to ensure that, 1, you remove the subsidies, 2, that it stops, by so doing, it stops distorting the allocation of resources and makes people go into productive activity rather than unproductive activity. That's 1. 2, the effective price of petrol is the price that you pay when you buy the petrol, plus the delay to buy it when there's a shortage. So let us assume that the subsidies are removed, or not removed. And then it takes you 2, 3, 4 hours to buy petrol. The average man hour is probably, God knows how many hundreds of naira. So you find that instead of paying 165, you are effectively paying about 500 naira. And what is the price across the border? The price across the border is about 400 in Ghana, 385 in Benin Republic. So the price mechanism is an efficient and the most important or most effective allocator of resources. You have the invisible hand that allocates resources, and you have the hidden hand that tries to intervene and create all sorts of distortions. So, not to bore you with economic jargon, the truth is that, yes, you must remove the subsidy. 2, it's not enough just to remove subsidy. It must be followed by efficient deployment of resources. Because if you remove it from people and then you put it into a government wallet, which is subject of leakages and inefficiency, then you are not doing anything. You are robbing Peter to pay Paul. The reality is that it's a continuum. Remove subsidies, ensure that the money is used for expenditure items that will have a direct impact, and the people are better off. If you cannot do any of these things, then you might as well not start. And that's what the leadership has to contend with, and this is what the policy prescriptions that we are making are aimed at: efficient use of government, public sector resources, proper governance in the private sector, encourage investors to come in. When you put these 3 together, you will have growth. And not only growth, you will have accelerated growth, sustainable growth, and inclusive growth.
Well, Mr. Rewane, let me go back to the point about the 2.3 trillion naira that the Buhari administration is looking for. Now, in the last 1 year, even most recently, the National Assembly approved loans, external loans for the government. But the critics are saying that all these loans that we keep taking that will amount to mortgaging the future of Nigerians, and that in any case there is no transparency, there is no accountability, and that taking external loans is not the only way to address the budget deficit that government faces. Some of the critics have pointed to the Buhari loot that is just coming in from the United Kingdom. They've also said that, look, reform, governance reform, is probably what is needed in the long term. I would like you to help evaluate some of those criticisms, particularly as some people are even saying that there is no guarantee that we will get those loans, and that is why the government has not disclosed where those loans will come from, either at the multilateral level or the bilateral level. And secondly, there was a policy that was announced recently by the federal government, what they call national poverty reduction with growth strategy. Now, how is that different from other policies that are already on the table? Because what we were told was that that proposal about poverty reduction through economic growth was proposed by the Presidential Economic Advisory Council, of which you are a member. What is new, in the light of the fact that we've had such policies again and again, again and again? Is this just about us being seen to be doing something on the part of the Economic Advisory Council?
No, the truth is that let me break it down, because you put a lot of questions in one. The first part is about debt and the efficiency of using debt as a stimulus for growth. The second part is about poverty reduction and poverty elimination, reduction, and program. So as far as debt is concerned, one thing that is clear to me is that you know that our total external debt was about $10 or $12 billion in 2013, and now it's, with this new one, to go all the way to $38 billion. So external debt per head is quite high. But again, what's the alternative? One thing that is clear is that creditors have conditions precedent, conditions consistent, and conditions that will exist throughout the tenure of the loan. That brings discipline. It brings discipline to the process, and that is more useful for Nigeria, because I think that creditor discipline has been used to force Nigeria to be compliant and not run riot on various things. So I think the creditor discipline, the use of the money, the productivity gains that will come from the money is important. But also debt service as a percentage of independent revenue is becoming much higher. So we would have to deal with the revenue problem, and we'll have to deal with the debt service problem. And don't forget, this is happening at a time even when interest rates in Nigeria are artificially low. As we see things going globally, the U.S. inflation has hit 4.6%. There's no question, no doubt in my mind that the U.S. will increase interest rates shortly. Yes. And global interest rates will increase. And Nigeria has no choice but to begin to increase interest rates. At that time, the debt burden will not just be the nominal debt, but the excruciating level of debt service. And that puts us under pressure to ensure that whatever we borrow produces and results in increased productivity and output. I think that is important. Therefore, multilateral, bilateral, export credit agency, and Eurobond, international capital markets, all of these people put together will put Nigeria on the straight and narrow and make sure that we perform and we participate, just like other members of the international financial community. So I have no doubt in my mind that the discipline that comes from borrowing will help keep Nigeria stable. Having said that, now let's move to the question of poverty reduction and elimination program. Yes, it is true that we came up with a recommendation. It is true that, as you know today, that Nigeria makes 20,000 children every day. So I want you to imagine that even if you are removing people from, there are three levels. One, removing people from poverty, or preventing them from getting to poverty in the first place. Removing those who are in poverty from poverty, and ensuring that those who are also in the workforce continue to have work to do and their productivity increases. These are all of these things put together. And It's, I will not say it's one of, seeing one, you've seen them all.
Well,
I think.
Mr. Rewane?
Yes.
Let's just take a short commercial break and then we'll come back to you.
No problem.
To speak further on the poverty reduction strategy. We'll be right back. Please stay with us. Welcome back to the morning show here on the Arise News channel. Our guest is still Bismarck Rewane, member of the Presidential Economic Advisory Council and Managing Director and Chief Executive Officer at Financial Derivatives Company. Mr. Rewane, thank you very much for staying with us. Yes, you were talking about the Buhari administration's poverty reduction strategy. And I asked, how is this new strategy proposed by the Economic Advisory Council different from what we had on the table before now?
No, what is unique about this is that we have identified, first and foremost, there's nothing, it's not new, Nigeria is still Nigeria, but what we're trying to do is to shift resources in a way that it has a direct impact on people's activities. So we looked at agriculture. For example, only 2% of the cultivatable land in Nigeria is irrigated. So, and we have about 28 or 30 or so more dams in Nigeria which are sitting idle. How do we use resources to reactivate these dams so that people stay close to the farms and they can produce in those areas? And that would reduce migration and also by implication reduce some of the conflict that you see today. We looked at that. We looked at the petroleum industry bill and how it can be amended and how it can also lead to actually nurturing the goose that lays the golden eggs to ensure that both at the pipeline, the midstream, the upstream and downstream level, it helps mobilize resources to be used in fostering agriculture. We also looked at the ICT broadband area. So how is it going to be funded? We said funded differently in the sense that it is not a government project anymore. It has to, we have a fund which will be funded by private equity funds and other institutional investors who will expect a particular type of return, and that brings discipline to the process of poverty eradication and poverty elimination in the long run. So we dimension the fact that the number of people coming to poverty, we know who they are, how many they are, we know how much output we require from different sectors to ensure that at least you reduce the number of people falling into poverty and you begin to take some out of poverty. So please do not forget it's a 10-year program. So we are only in year 1 or year 2, so we have a long way to go. But it's going, the longest journey in the world starts with the first step, and I think that is the whole idea. And it's important that there is, like I said earlier in the program, there is coordination of various economic activities and policies to ensure that, one, investments come into this country, both domestically, in diaspora form, and also international portfolio and direct investment. When you have that investment pool, it begins to trigger and actually increase productivity. Don't forget, of our total investments in the country, at least 60% of our gross capital formed is in stranded projects, incomplete projects, which actually have a negative multiplier effect on output. So we looked at all of these things and presented to the president, and the president got Federal Executive Council approval, and we're now in the implementation stage. And the details are actually being handled in the office of the president himself.
Great. Well, in your report, you counted the cost of insecurity and placed that cost at $10.3 billion, which is staggering. I'd like you to expand on that. And also one of your suggestions to lessen the impacts is to hasten the implementation of agricultural reform policies, particularly livestock farming. I'd also like you to expand on that in view of the topical issue of the move by the southern governors to ban open grazing.
I think you have to understand about agricultural transformation. First of all, Nigeria is the second highest country in the world in deforestation. In other words, we've fell our trees, we are not planting new trees. The urbanization is taking its toll on people, and of course that's part of the global warming renewable energy programs. So we have to situate that. But insecurity, $10 billion $10 billion in a $500 billion economy. It's significant. The cost is, in fact, the direct and indirect cost is much more than what you're seeing there. Because it's disrupting things, it's creating, it's actually stimulating inflation, and it's actually, there's migration. People who are afraid of staying in this country are going to other countries. So we have brain drains, we have all sorts of things that are happening. So whatever you saw there as a cost is a very rough guesstimate. I don't want to use the word estimate again. It's an estimate that has a lot of loose numbers that you cannot actually pin down. But it gives you an idea and a sense of the risk that you run if you do nothing. So one is that we have policies and we do not implement those policies efficiently. And when we implement them, we take an inadequate doses, and therefore we end up having negative outcomes. I think that's important. But, when you look at everything altogether, like the question you put, we need to go back to what are the prices in the economy that will put the economy in what we call general dynamic equilibrium. So what is the price of petroleum products? What's the exchange rate policy? And what is the cost of electricity tariff? So that all of these things put together, and when you have investments in all of these sectors, you begin to have sustained, accelerated growth. And that is what the whole idea is.
All right. Thank you so much for the insight. I mean, I read through the report, fantastic report, I should say, but I didn't see an argument for debt capital, which is a subject that really interests me a lot, and property rights in this country. I mean, we keep talking about increasing the revenue buckets of government. Could this be used? What's your take on it? What's your idea?
I didn't quite get. You said a debt cap?
Debt capital, property rights.
Okay.
Yeah.
All right. I understand what you're saying. It is an issue. And that, debt capital actually means that it's the same, another way of saying stranded capital, or capital that cannot be used. And the opportunity cost of that is significant. So how do you ensure that capital stock is being used efficiently? And what is the result? And that result is measured by one variable only, and that is total factor productivity. If your total factor productivity is positive and above the maybe 3 to 5%, it indicates that over the next 5 to 6 years, you'll be growing at a rate higher than your total factor productivity rate because your capital is optimized. What we've seen, even today, we have negative total factor productivity of minus 8%, which means that except something dramatic happens, you are likely to be wallowing in negative growth or below the takeoff stage for some years to come. So what are the things that are going to turn things around? You will have the Dangote refinery one. You would have the petrochemical and fertilizer plant. You would have some rail investments that are going to be manifesting themselves. You would have, you would have growth in certain sectors, especially in agriculture, right? The agricultural value chain. If those things happen, and there is also some peace and security around the country, there is a chance that the economy will begin to see signs of rapid recovery in the year 2023, 2022, and 2023. But if those things are not done or done in a haphazard manner, right, then you are likely to wallow in negative.
I wanted to harp on property rights because, one of the greatest costs of debt capital in this country is property rights. How property right is not flexible, how people cannot flip, their property and use it for more commercial ventures and the like. Yeah. So there's a big gamut around property rights, land use acts.
No. You're right, because the securitization of debt, right? One of the things that is important, that securitization of debt, and therefore how do the asset-backed facilities that are going to be put into the market, real estate investment trust, and all this is. Well, if you don't do something about the transferability and the pricing of property values for collateral, for securitization, you will actually suboptimize the use of this facility. So I agree with you that something has to be done.
We have just a few seconds to go, but there was a subject that was brought up this morning by Rotus earlier on. We have just a few seconds. What do you think of shares divestment in Nigeria? And what signal will it send to the IOCs?
It's not a good development, but Shell is a very conservative company, and they are the masters of what they call scenario planning. It's a signal to you that, one, your reserve assets in the ground are diminishing in value every day, and that time is not on the side of Nigeria. You better act and act now, or else it's going to be difficult in future.
Thank you very much, Mr. Bismarck Rewane, for joining us.